Hi traders, this is a daily forecast on Eurodollar. Today is Tuesday, December 7th. This video is created by Finteria Markets. Please check our website. There you will find many interesting tools and services, educational materials, and all information on trading conditions. We offer one of the best spreads in the Forex market, and our spread on Eurodollar is below 0.1 pip most of the time. So let's start our analysis. I'm going to choose the service which is called FX risk aversion. It shows you how risk aversion is dominating the Forex market. So usually when the values are above 80, it means that there's a strong risk aversion. And when the values are below 20, it means that risk appetite is very strong. So right now we can see that the total value is 5%. It's extremely low. And it actually means that the market is now driven by the risk appetite. So in this environment, usually safe haven currencies depreciate, including the US dollar, Japanese yen, and the Swiss franc. And risky currencies, risky assets appreciate, including Australian, New Zealand, and Canadian dollar. So right now we can see that the value is really low, and it means that right now we see that some commodity currencies such as Australian dollar, Canadian dollar, and New Zealand dollar should benefit and appreciate over safe haven currencies. Let's use another service, which is called Currency Strength. It shows you movements of currencies based on currency indices. So by using the service, you can see which currencies are the strongest and the weakest. So here we can actually see that most of the currencies, they move in groups. So we have the group of commodity currencies, especially the Australian dollar and the Canadian dollar. The New Zealand dollar is lagging behind. And we can also see the safe haven currencies, Swiss franc and Japanese yen, they really have a high correlation level. You can see the brown color and the red color is the Japanese yen. So in this environment, the best trades are on the Australian dollar versus Japanese yen, or buying Canadian dollar versus Japanese yen. Speaking of euro dollar, we can see that this currency pair is quite stable. The US dollar actually also suffers as a safe haven currency, but much less than other safe haven currencies. The reason behind is that it doesn't cancel interest rate expectations. On the contrary, in case if the risk and the sentiment improves, it means that there's more chance that interest rate hikes are on the table and the Fed needs to move much more aggressively. And also in this environment, we can see that the British pound can benefit because before, when the risk was off and there was a strong risk aversion, we see that the British pound suffered. So as we know that there's still some likelihood that the interest rate decision will be increased in December. So the pound can potentially increase in the environment when the risk appetite grows. So finally, let's also discuss the economic calendar. There are no major events that are expected for today. Probably the most important is going to be the economic sentiment in Europe. So usually this event can cause some volatility. We can also quickly check the situation on the commodity markets. So we also see that the commodity markets confirms that sentiment is improving. So oil is above $70. Finally, we see also, for example, copper is more stable, but yesterday it was quite positive and grew by 1.65%. So the Asian markets were also very positive. We can check the Korean index, Hong Kong almost over 2%, and also Nikkei had a really strong movement, almost 2% as well. So right now, if we check the S&P index, we also see that we are moving slightly higher. We're like creating new daily highs. So overall, there are multiple confirmations that the risk on sentiment is improving. So finally, let's switch to the chart and conduct a technical analysis. I'm going to start with the daily chart. Sometimes when the situation is not clear, it's always better to zoom out and see what is actually happening. So we can see that we're moving in this downward channel. Here, if we speak about the important levels below, we have 1170. So this is a pretty substantial level. It's actually from June 2020. And above, we have the level 1430. So we are in this buffer zone, let's say. Here still the currency pair looks quite bearish. In my opinion, we should consider any opportunities to sell for a potential retest of this level. So let's also move to the hourly time frame. Right now we are in the consolidation phase. So we saw these sharp movements which occurred on November 30, when basically Jerome Powell said that he's wrong about transitory inflation, that word transitory needs to be removed. And actually this was a very hawkish signal from the Fed. And so far we see that this currency pair is drifting sideways, so there are no substantial movements. But overall, I would say that there is more likelihood that we will see that the downside breakout. So at least this is a scenario that I'm expecting, unless the situation with Omicron will worsen. But I think chances are decreasing with every day. Yeah, there's one more thing I wanted to show. It's the Google Trends for the word Omicron. We see that it's actually getting less popular. So much less attention is paid to Omicron. So the peak was on November 30, but right now we're much below. So overall, it means that the situation is not really that dangerous. Also, if we check the situation in South Africa, so first of all, the vaccination rate is very small, 24%. The number of cases is growing, but only 9 deaths so far. So it seems to be much more soft than any other variant of COVID. And generally, this is quite positive for the markets, in my opinion. There's still a lot of noise, a lot of stress, and sometimes you can see really screaming headlines that Omicron is very dangerous. But so far, you really need to pay attention to the stats, to the numbers, and also to political decisions which are taken. And so far, the decisions which are taken in Europe are slightly more restrictive than elsewhere. So that's why I think that is another reason that we can see a lower business confidence. And for example, today we have zero economic sentiment, which can actually come lower than it's expected. So getting back to the charts and to the hourly time frame, I just wanted to mention that here we have a few important technical levels. I would carefully watch the level 112.60 in case of a breakout. In my opinion, there is potential to move lower and retest. Ideally, I would like to see a much more substantial move below, like a clear breakout, to wait for a retest or for a correction, and then consider short positions in the direction of trend. Potentially strong movements can occur on Friday because we will have the CPI data. So for me, like in case if this occurs today, this is still possible, but there's more likelihood that volatility will increase by the end of the week. And also on the chart, we have another like a sort of triangle formation, which looks a bit more like this. So right now we're gaining more energy and consolidating at the current levels. In my opinion, well, in case if we have a breakout, I would not rush and sell immediately because there are multiple levels that you can see right here. For example, we have one level located around 113.30, and there's another level slightly above. And also here we have another level. So there are multiple levels, multiple resistance levels. So in this case, I wouldn't rush to immediately sell, but I would ideally, I'm sorry, I would wait for the best opportunity. So in this case, if there's a clear, let's say potentially the market will decide to wipe out stop losses above this level, and from approximately this area, I would consider short positions, because so far, if we remain in this area, we look very neutral. Here, I would consider there is a much better chances to open short positions. Alternatively, the base scenario is to consider short positions below 112.60. So that's it for today. I hope you enjoyed this analysis. Please join our Telegram channel and also subscribe to our YouTube channel. Thank you for watching, and I wish you a nice day.